After the break, you're watching DD India News Hour, and I'm Preeti. Let's get to updates from the world of business now. Talking of the Asian stocks, the nation shares slumped and gold prices rose on Monday after Iran's attack on Israel, and Saturday stoked fears of a wider regional conflict and kept traders on the edge. Markets in Asia began the week on a cautious footing. MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.7%. Nikkei slid more than 1%. Hang Seng's index slumped 0.8%. The escalating tensions also sparked a flight to safety that sent gold rising 0.51% to $2,356.39 an ounce. Brent crude futures peaked at $92.18 a barrel last week. This is the highest level since October. S&P 500 futures and Nasdaq futures each rose by 0.15%. The Indian benchmark equity indices Sensex and Nifty opened in the red on Monday, led by global cues and uncertainties. Following the trend in Asian markets, Sensex plunged 700 points and Nifty was near 22,300. Investor sentiment was affected by Iran's retaliatory attack on Israel, raising concerns about a potential wider conflict in the region. All right, joining us is market expert Ambarish Baliga. For more on this, thank you so much, sir, for joining us on DD India News Hour this morning. When we talk of the skidding which was witnessed in the Indian markets and at the Asian bourses, was it on the expected lines, more or less, because of the crisis in Middle East?
Absolutely. I mean, because of this crisis, and whenever you have the geopolitical issues around, it affects the markets first. And typically, we have a knee-jerk reaction, which is what we saw this morning. And going ahead, I think it will clearly be decided by, in case the situation gets worse or it stabilizes, based on that, the markets will move. But for the time being, yes, people are slightly afraid, skeptical as far as the geopolitical issues are concerned. Because whatever said and done, this has pushed up the commodity prices, oil prices are moving up. And there's also a fear that whenever there is geopolitical issues, it also affects the supply chains, thus pushing up the prices, reducing margins for the companies. So all these things are affecting.
All right. So these were the factors. But for investors, a quick word of caution. What should be the strategy from here on? And also, what factors in the near future would still be very critical and important in the markets?
See, other than geopolitical issues, as far as India is concerned, there are two factors which will affect us going ahead. Clearly, we are in the midst of elections. We'll be starting polling in this week and going on for the next month and a half. I think the outcome of the election is something which will be watched out for. And at the same time, what is important for India is monsoons. Although, we have SkyMet saying that monsoons would be normal. But I suppose closer to the monsoon time, which I would say is end of May, early June, is when we'll know whether monsoon will play out as expected or not. I think these are two most important factors which can affect the growth going ahead. And similarly, it can affect the markets. I think these should be watched out for. But for the time being, especially when you're talking of elections means certain amount of uncertainty. And although there are expectations, in case they are not met to a certain extent, we could see disappointment. So at this point of time, I would say one should be a bit cautious.
All right. It was not just very long before Sensex touched 75,000, and today you see it tank more than 800 points. Having said that, any specific areas, any specific sectors which the investors should look forward to?
Typically, if you look at a sector like FMCG, that normally performs during election period, because that's a time when you have more cash in hand as far as the bottom of the pyramid is concerned, and that's what can drive a sector like FMCG. So that's one space I'm decently positive on. And again, that space has not really performed too well in the last 12 to 15 months. So I think there's a decent amount of cushion on the lower side.
All right, that was about the Indian markets. What is your reading and evaluation of the global markets? We are talking of the geopolitical factors, how they have a bearing on the markets. What is your reading of the global markets?
No, I think as far as the global market is concerned, overall we are still seeing that slowdown. Although we are not really talking of recession, but there is a slowdown. Inflation is moving up. I think this will have a bearing on the global markets, especially the US markets. So I really don't see too much of an upside from here as far as the US markets are concerned.
All right, so that was a lackluster, shine at the markets, but at the same time, we see gold is glittering all the more. Your word of advice on the gold prices, and do we expect it further to move on here, further soar from here on?
I think the gold prices have already moved up decently well, and if you look at the history, gold prices don't move up continuously. It moves up in a sort of a block, and we have already seen that move. Unless, of course, the geopolitical issues worsen from here, I think only then the gold can move up more. But then, for the time being, I think the move is already done.
All right. A very quick closing comments from you because you've told us the investors need to be cautious and the times are still uncertain given the geopolitical situation and also the electioneering process starts back home. Put all this
Right.
together, a very quick word of closing comments from you to our viewers.
See, I would say that in the last approximately 3 to 3.5 years, most of the investors in the Indian markets have made good money. As long as they have been investors, they've made good money. I think it's time to take some profits off the table, be in cash to a certain extent, because going ahead, we'll clearly see volatility. So if you need to utilize that volatility buy at lower levels, you need to have cash in hand. So when the markets are close to their historic highs, it's best to book some profits and take some cash home.
All right, put some profits and take cash back home once the markets are high. We'll have to see when that comes to reality because today the markets tanked more than 800 points. Sensex tanked more than 800 points. Thank you so much, sir, for joining in with your inputs this morning on DD India News Hour. All right, let's take that thought forward to our correspondent. Shama Mishra is joining us from Mumbai. Shama, we just had a word with our guest who in fact,